This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now to talk about the market trade we saw on Tuesday. It felt kind of like deja vu to Monday's action. Just didn't seem like there was a whole lot going on, but we're going to try to dive in and dive a little bit deeper into what we're seeing in this market right now. Jim McCormick, agmarket.net, joining us here today. Jim, always a pleasure to catch up with you, sir. How you been?
I'm doing well. Thanks for having me on, Jesse. I appreciate it.
Well, thanks for joining us here today. And, I was wondering if we'd see a turnaround Tuesday, but we didn't. Really just kind of felt like I made the comment to you earlier before we jumped on air. It just felt like watching paint dry. Not a whole lot of fresh news in this market. I know we have a lot of stories, but just overall on Tuesday, not a whole lot of fresh news. And we just kind of drifted and ebbed and flowed, and it seemed like the path of least resistance again was to the downside, at least in the grain and oilseed trade, Jim.
Well, exactly. I think path of least resistance is definitely to the downside. Harvest pressure is probably kicking a little bit. There are some bullish stories out there, but right now I think the market's just kind of concentrating on what these yields are going to come in as. Right now, we're not getting the flash sales in the beans like we had last week to get the bean market kind of excited. We know we've got a problem with the river market and the low river levels affecting trade. But, we've been talking about that for a week, 10 days now. The market, I think in general, is just kind of in that looking for that kind of early fall low type of situation. You hear a lot of people talking about it in the beans now that you're over 50% harvested in the beans. We're not quite there in the corn. Like I said, we were under pressure. We did see a nice little recovery, I think you could argue, in the corn and beans late in the day, but I think it's more a situation the market kind of worked its way lower, ran out of sellers, and kind of worked its way back up for the latter part of the trading session more than anything else.
Yeah, and to your point, we did see a bit of a recovery off the lows. I guess that is maybe one positive to take away on the trade on Tuesday. And, I look at this market, and it feels like you made this point to me as well before we went live, that we just feel kind of stuck. And I look overhead, especially in the corn to bean market, that resistance around $7 in corn, that resistance around $14 in soybeans. And it just feels like we just can't seem to poke our heads above that yet. We're not really falling out of bed here, Jim.
Exactly. And I think that's kind of where we're stuck at, Jesse. I think you're going to see the move back up toward 14 in the beans and move back up to $7 in the corn. I think you're going to see a lot of producers looking to move some of that grain that they cannot store at those price levels. The basis in general is holding in there relatively well, except for maybe a few locations along the river. Processor bids are very, very strong in the bean complex right now. So the market goes up near those levels. Producers reward the market. Then on the other hand, when the government came out last week and projected that carry out at 200 million, that's a lot less than what their trade was thinking. And the reality is that is a very tight supply for beans. So when the market gets closer to the 1350 level, I think you're going to find end users step up and buy, especially the like the bean processors. So we're just going to be kind of stuck in that range until we can break out, until something breaks us out of it. Now, specifically on the beans, I think what we got to be very cautious about is demand. A lot of people, including myself, think demand still may be overstated. Some estimates are by as much as 100 million bushels on the export side of the equation. China came in and bought a lot of beans last week and kind of caught us up a little bit. But if they back off the exports again, that could be a problem. Brazil's off to a halfway decent crop. We're not getting a lot of beans shipped out efficiently, which is kind of limiting some of the sales. So if that bean carryout starts to creep up toward 250, 300, and I think eventually, unfortunately, it could, that may be what finally breaks the bean market out of this sideways range. But we may be several months away from that before the government has the nerve to raise the bean carryout that much, because they may not want to cut demand really aggressively more until they get a better handle on what South America production's like. Corn, on the other hand, you got to carry out below 1.2 billion bushels. The reality is that is at pipeline levels for all intents and purposes, about a 30-day supply. So if you look what the cash market is, especially in the Western Corn Belt, $1, $1.50, $2 over. We've heard reports of end users in Kansas have bought anywhere between 15 and 17 million bushels of Illinois corn to be shipped to Kansas for the feedlots. So if you're an end user, I think you see corn get back down toward that 650 level, you're going to find a lot of end users say, look, that may be as good as it's going to get. The producers are going to hold tight. The crop could get a little bit smaller. Drought in the Midwest is getting worse, not better. We're now hearing producers are nervous about spending money on fertilizer that anhydrous that may not seal up due to the dryness in the ground. That's got people a little bit nervous about corn acres potentially. So I think end users will buy it near, like I said, that 650 zone. Producers, they're going to sell it near 7, and we're stuck in this range. Now, what could break us out of that range? Probably problems in South America could do it. If the Brazilian bean crop gets in trouble, or one thing we're watching, they're a little bit too wet in parts of Brazil, believe it or not, Jesse. If they can't get those beans planted, guess what? The beans get out late. Then the corn goes in late. And a couple of years ago, you might remember the Brazilian corn crop ran out of water, and the world we had a world shortage of corn. So those are the keys that might break us out. Lastly, one other key that could break us out is Putin. He's still threatening to close that grain corridor. If he would close that grain corridor, it changes the whole world paradigm on where they're gonna get grain from, and that could force corn demand up higher than what the government's thinking. It could force wheat demand up. But until we get some kind of a headline that really shakes the market's supply-demand fundamentals, we're probably more stuck in a sideways range.
Jim, on the cash thoughts as well, looking at basis, you talked about that a little bit. Thinking about farmers right now harvesting, maybe going right to town off the combine with some of their crop, whether it's corn or beans, looking at some of those basis levels. I've heard some rumors that some elevators are not doing any deferred pricing, delayed pricing. They're saying, here's the cash price, take it or leave it. I wonder, just thinking about ideas like that, or just thinking about this cash market in general. I mean, what is a producer, what are they looking at here right now? Would it be wise to sell a little bit off the combine here, or sell a lot off the combine possibly?
Let's start with the corn that you cannot store. That's probably the easiest decision in my viewpoint. You've got corn, folks, and you cannot store it. The basis is good for the most part. I'd sell it. I would not pay the commercial storage right now. Here's an example. I talked to one of our customers. To store corn through the end of the year, they're going to charge them 28 cents plus shrink and drying charges. So it's easily going to get over 30 cents a bushel. You can essentially sell the December corn here, which is right around 680. Due to the way the market's structured, due to the tight supply, July corn, 6 months out roughly, is only trading about 682. So you could sell your that D's corn right out of the field, don't pay the commercial storage, save yourself to 28, 30 cents, and turn around and buy a July vertical call spread for essentially the same price, 30 cents. Now, what does that do, Jesse? If the market goes to $8 in the summertime, you're going to net out a 30-cent profit. Well, if you store corn, if you store corn in the summertime, it's going to cost you more than 30, because the 30, remind you, only got you to essentially the end of the year. So if you held it in, you're going to have even more storage costs. So you probably won't make as much money if July corn's trading at $7 at expiration. On the other hand, there is some headwinds to the economy. We don't know how bad the recession could get. So let's just say the recession gets bad, unfortunately, and the market breaks. Well, if you sold the grain and bought the call spread, the most you're out is 30 cents. If you paid the elevator the 30 cents to store it and the market broke 50 cents, guess what? You're out the 30-cent storage fees plus the market going against you 50 cents. So for me, with the lack of care, with a lack of essentially cost to move, essentially re-own out in July, it makes a lot of sense to me just to go ahead and tell the elevator, move the grain and have it, and I'll re-own it on paper. Beans, it's the same way. Consider, if you're bullish beans because you think, wow, South America is going to stumble potentially, go out like the May, maybe buy a vertical call spread. If you're willing to take some margin risk, make it a three-way, sell a put against it. I am encouraging producers, Jesse, though, on grain on farm, specifically in the beans. A lot of people are bulled up on the beans right now. And a lot of producers have sold a lot of beans, we know. But there's also a big chunk of beans unpriced going into their own storage facilities. Now, when you look at, like I mentioned earlier, I would not be surprised if the bean carryout grows to 300 million when it's all said and done. So worst case scenario, if you're a producer out there, Jesse, you put you put the soybeans in your bin and you're waiting for that rally. And then all of a sudden, Brazil doesn't have that weather problem. They have this monster crop that they're thinking. Then you're going to start seeing bean prices start to work lower. Then worst case scenario, China's economy continues to struggle for various reasons. They cut their demand. So all of a sudden, you're looking at a bean carry out that we're competing with Brazil monster crop. You're not going to see $14 beans, let alone $15 beans. So I'm encouraging you guys to consider buying like May puts. Do maybe a three-way or something to try to protect those beans in the bin, because I do think there is a risk that if South America crop does produce, as some people think it could, a record, these $14 beans will not be around for long. Now, I said, the weather is going to be the key, but it's just something producers need to be aware of.
Jim McCormick with agmarket.net is our guest today here on Market Talk. Jim, talk to me a little bit more about this wheat market. I'm starting to hear a little bit of worry just about emergence, as we're 39% emerged in the winter wheat now. It's dry in the southern plains. We have dryness in Argentina and issues with their wheat crop. We, of course, still have the Russia-Ukraine concerns when it comes to wheat. What's your thoughts with wheat overall here as we're getting into the middle of October?
I think in general, your weakness is going to be bought by the wheat. You've said it. We're trying to get this wheat planted. We're planting into the dust. People don't, there's not a lot of moisture. Emergence is becoming a legit problem. A lot of people are concerned about what's going to be like in the spring. The reality is we're running out of time to start building back soil moisture. It's already mid-October. You get to mid-November, the ground freezes. So the wheat supply is going to be very tight. The Argentina crop is shrinking back due to drought. Australia had a pretty good crop, but now they're dealing with quality concerns in Australia. The Ukraine, their crop is there. It is smaller. The question is Putin going to let it out of there? If there is one thing in the world that is under normal circumstances, Jesse, that'd be bearish, it is the Russians. The Russians have a huge wheat crop. And that's part of the problem we're dealing with Putin and what's going on in the grain corridor. Plain and simple, Jesse, Putin's mad. We're not buying his wheat. Not we, but the world is not buying his wheat, plain and simple. There aren't any trade sanctions out there. There's no government out there, as far as I know, that's not telling countries you cannot buy wheat from Russia. They're not sanctioning of that due to the high food crisis. But the reality is nations are choosing not to deal with Russia for various reasons. And that's incredibly frustrated Putin. And that's why he's threatening to close the grain corridor potentially. But that's kind of the dynamic you got. It's kind of like having China. China's got a lot of wheat, but they don't sell it on the export market. So does it really matter? If Russia's got wheat, but no one really wants to buy it, that's going to keep the world supply relatively tight. So if he does shut down that grain corridor and this, the fighting intensifies in the Ukraine, it could have a bullish story to the U.S. wheat. And if we stay dry into fall, we cannot get a good emergence, and we're betting everything in the springtime. You're looking at probably even more volatility this year than we had last year in the wheat market, which is hard to believe, but I think that could happen.
Yeah, that's very, very hard to believe, Jim. Very, very hard to believe. We'll just have to see how the storylines play out. I know as well, looking at the stock market, the dollar, of course, those are still things that we're watching closely in the commodity trade. Crude oil breaking a little bit on Tuesday. It sounds like maybe President Biden could authorize another 14 million barrels of crude oil from the Strategic Petroleum Reserve potentially. So I know watching this energy market, that's going to continue to be something that weighs heavily into the grain and livestock trade here as well, Jim.
It definitely will. I mean, the crude oil tends to be the canary in the coal mine as the overall economic modeling of the United States. As you know, when the crude oil starts to rally, people turn a little bit more pessimistic on spending money and all that. When the crude oil breaks, gasoline prices tend to get a little bit cheaper. People tend to feel a little bit better going out spending money, maybe going out to eat. So that's something we need to keep an eye on. When I look at it right now, yeah, Biden is definitely trying to keep prices down. Let's face it, there's probably a little bit of political motivation behind it as he's trying to keep prices down going into the midterm elections. On the other hand, the Saudis are doing their darndest to keep the price over $80, $90 on the Brent crude, plain and simple. They've got high food prices. They've got people they need to pay. And, it is kind of a political tug of war between the Biden and the Saudis right now. And then the market in general is just taking the key off where the economy is going to be. And the reality is the economy is giving us just a lot of mixed signals at this point in time. Bloomberg came out today and said all their indicators say we will have a recession, folks. It's not will we have one? It is we're going to have one. Now the debate is how serious it's going to be. But on the other hand, it is kind of strange at this point in time. We are still hiring people. As of the last jobs number, we continue to hire people. Historically, we've never had a quote unquote recession while we're hiring people, because normally when you're in a recession, you're firing people. Some of the we'll keep an eye on their earnings right now. Some of the airline earnings I've heard, they're looking for very good earnings because people continue to travel. There's a sector of the society right now that is saying, you know what, it costs a lot to go, but I still believe they're kind of a little bit of a COVID hangover, and I'm still going to go on vacation. I didn't go for the last couple of years. We're going to go, and we're going to see if they can kind of offset some of the negativity of where this at. We'll see. I mean, I'm guessing the Fed's not done raising interest rates. I think they've got more to go. Mm-hmm. That is going to make the cost of loans of a producer more expensive. And I think that will slow down the economy. Like I said, the real question is how slow is slow? Is it going to be kind of a soft landing or a hard landing? And only time will tell. If you're a producer, that is a risk you've got to quantify. If you're carrying a lot of grain unpriced, you might consider ways to hedge it. Even though the supply situation does look friendly, the economic situation could turn back negative relatively rapidly. And as I like to remind people, the market doesn't owe you a profit.
Well, I'll save the quote unquote best for last here today. We've seen 2 days in a row now of decent trade in the livestock sector with hogs leading the way. I wondered if December hogs would come up to the cash index, and it sure looks like they're trying their best to do that here. As you look at this protein sector as a whole, Jim, have to be fairly happy with the action we're seeing to start the week.
Oh, you definitely got to be happy with it. Yeah, the question was, would the cash go down to the futures? The futures go to the cash? I think we've got our answer right now. Futures are going to make a move back up. They've got some resistance right around 87.25. If they can get through that, these hogs around that, you're looking at around 88.72. And it looks chart-wise that we can make that move. Cattle market, it looks like it may make its move back up toward 150, 151 potentially. Like I said, the stock market continues to move. There's a few people out there arguing we've seen the capitulation bottom of the stock market when you had that incredibly negative inflationary reading last week and the market had a 1,700-point reversal. That's got some people thinking maybe the stock market bottoms in. I'm not in that camp. I'm still a little bit negative. I think the near-term trend's down. But when you see those type of things, you tend to get people willing to go out to eat, feel a little bit better about their stock or just their economic situation in general. Mm-hmm. So hopefully that'll allow this cattle market to work its way back up toward the 151 level.
Well, Jim, great stuff as always. Floor is yours. Final thoughts before we wrap it up for today.
Well, the one thing I'm just going to say is, I think you said it best to begin with. We are in a sideways choppy range. I would expect that to be choppy. But, if you're a producer out there, remember there is definitely some macro landmines out there, and you've got a great opportunity to lay off risk. Jesse and I did not cover it. We didn't talk about the new crop, the 23 crop, but it's something I think you need to really take a very serious approach of laying off some risk, especially in the corn. We've got a lot of producers out there who are spending a fortune on fertilizer this year. If you're locking in that fertilizer price, do not forget to lock in some of your sales on the grains, because like I said earlier, the market doesn't owe you a profit. If the market does break, the economy weakens, all of a sudden you could be upside down. So don't be afraid to pull the trigger and at least get some risk management done for the 23 crop as well as the 22.
Well, Jim, if producers want to talk to you and the team there at agmarket.net about the crop that's coming off the combine now, or that 23 crop that you mentioned, what's going to be the best way to get a hold of you guys?
Call us directly at 844-424-6758. If you'd like a free trial of our research, go to agmarket.net.
Well, with that, Jim McCormick, agmarket.net. Always a pleasure, sir. Thanks for joining us today. Have a great week, and we'll talk to you again real soon.
Thank you for having me, and have a safe harvest.
Jim McCormick with agmarket.net. That's going to do it for today's Market Talk. Find us online at markettalkag.com. I'm Jesse Allen. Have a great afternoon.